Red alert for millennials. Netflix is going to stop password sharing. Coming up here in the jog. Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It is 8:21 here in the middle part of the country on Wednesday. It is April 20th, 2022. Here's your morning jog around the economic headlines of the world. I want to start off with Netflix's earnings last night. Whew, not so good. They lost subscribers for the first time in their history. They say there's more than 100 million people worldwide, including 30 million in the US and Canada, that use their service but don't pay. Of course, lots of folks share passwords to streaming services. Hey, I've got Paramount, you've got Netflix, we'll do a swap, etc. Netflix says they're going to start cracking down to increase profits, selling their service to more folks by just making them pay, right? 12, 15 bucks a month, whatever they raise the price to, continues to be a rock star company. The stock down really big on the subscriber growth numbers. Altogether, they have a huge position in the streaming wars, but there is quite a bit of competition in the space. Mortgage demand, speaking of millennial items, down quite a bit. And look at this. Mortgage rates continue to go higher now. 5.2% is the average rate for a 30-year home loan. Keep in mind that in October of 2020, that rate was sub 3. On a go-forward basis, housing demand continues to be very strong. Millennials getting out of the house, finally. You know that's one of my themes. As we tick into 5.25%, 5.5%, 6% territory, you're starting to talk about mortgage payments that just become really unattractive, even when rent's pretty high. I think we're starting to hit that bound where you're slowing demand considerably over a multi-year period. Last but not least, before we get you off to a nice Wednesday, Proctor Gamble, talk about inflation, had a nice quarter. Sales up 7%, volume, right, which is sales once you strip out price increases and currency, up 3%. Say they have no problem passing along price increases to consumers. Consumers continue to have really good cash on their balance sheets from a historical perspective and continue to spend as if there was no inflation or relatively little. Especially on smaller items, i.e. non-big tickets like cars. Inflation really isn't having a huge impact on overall economic volume, and that is a really good thing for the economy as we see additional earnings come out, and they continue to be good this earnings season. Really just seeing the market become more attractive, right? Prices for stocks are a little bit lower, earnings are a little bit higher. That is a better PE ratio and a better value in the market. Hope you learned something today. If you want some additional information throughout the week, feel free to find me on the internet. I'm out there. Until then, hope you and your family have a really good rest of your Wednesday afternoon. I am out.